Good day, everyone. Welcome to our webinar for June. We've got quite a lot of things to look at, so I'm going to make a good start here. I'm going to start with Wall Street, so let's take a look at the position on the S&P 500. It's a good place to start. On your screen you should see a chart of the S&P 500 which shows the recent history. I'm just going to use the mouse pointer to show you various things here. Obviously this is the record high, this candle here, which occurred on the 26th of January 2018 at the beginning of this year. Then after that we had our 10% correction, which took us down to this low point here at 2581, which occurred on the 8th of February. And since then the market has basically been moving sideways. It's tested that 2581 support level and obviously in the process created a double bottom, and since then it's been trending upwards off that double bottom, including a very strong candle from last night, obviously in response to the very good job creation numbers in America. The American economy on average is generating about 250,000 new jobs every single month at the moment. And obviously that is because it has been incredibly strongly stimulated for an awful long time. In fact, since the subprime crisis in 2008, first with quantitative easing and then with very low interest rates, the American economy has been stimulated and stimulated and stimulated, as has the rest of the world. Of course, the Europeans are still injecting about 50 billion euros a month of what is euphemistically called quantitative easing into their economy. In fact, quantitative easing is just another word for printing money, sort of in the same style as Robert Mugabe used to do. As far as the politics in America are concerned right now, this US trade war with China is unlikely to materialize. I never thought it would, because both countries have simply got far too much to lose. The whole business with North Korea appears to be just a public relations stunt. And the one thing that is looking more and more likely is that Donald Trump will probably be heading for some kind of impeachment. It's looking less and less likely that he will complete his first 4-year term in office. So that will obviously add a new dynamic, but it shouldn't affect Wall Street very much. If we look at the JSE overall index, you can see that the strength in Wall Street is being reflected on the JSE to a reasonable extent. You can see we've had a couple of nice days here after the hammer formation, which occurred there on the 4th of April. The market has been trending up. It's come down a little bit, but made a new higher low now, and now we've had a very strong upward candle, and I expect that today will be also quite a good day on the market. So our market is following Wall Street up, and that is generally what happens. The correction that we're in on Wall Street is now about 4.5 months old, and I'm expecting it to come to a head very soon. I'm expecting the market in America to break on the upside, and obviously that will take all the world markets, including the JSE, with it. And that means that there are a number of really good buying opportunities sitting on the JSE at the moment of shares which are basically underpriced. And I think a recovery to a new record high on the S&P 500 will drive those shares up. But I'll deal with those in due course later on in this presentation. The economy is looking a little better. Domestically, here inside South Africa, things are looking improved. Particularly the state-owned enterprises, or SOEs, they've all got new boards now, the latest one being Transnet, which has been put under Popo Molefe. And I think these new boards are obviously being chosen for good governance, and that is good for foreign domestic investment, FDI as it's called. An emerging economy like South Africa needs a lot of foreign investment to grow. So the effort being made particularly by Pravin Gordhan and others, to improve the state of our SOEs, our state-owned enterprises, is very, very important. Eskom, of course, is firmly now under the hands of Hadebe, who's the new CEO there, and he has so far managed to raise 43 billion rand. He says that there will be no load shedding this winter, and I believe him. He says he's got the coal situation well under control, even though 6 of the power stations appear to be short of coal. But in general, he's doing what needs to be done there, and I believe that the Eskom crisis is receding now. SAA, of course, is the latest problem child, asking the legislature for another 21 billion rand to go on top of the 55 billion they've already had. In my opinion, the solution to this problem is simply to close the company and sell off what is remaining. I don't believe that SAA will ever be able to compete effectively in the highly competitive airline industry. And there's really no reason for South Africa to have a national airline. It's just an expensive luxury. It's an ego trip, and it's one which is costing us an absolute fortune. Ramaphosa has been going around trying to get as much foreign direct investment as he can. The latest effort that he's making concerns the Japanese delegation to South Africa. Japan has stated that it is intending to spend about $30 billion US dollars in Africa over the next few years. At the moment, South Africa has got about 240 companies from Japan, Japanese companies operating here. And Ramaphosa is confidently talking about doubling the GDP growth rate in this country. Obviously, we want a big slice of that $30 billion. And I think that Ramaphosa is doing his level best to get whatever he can. Of course, we need to look, when we're considering this, we need to obviously look at the rand. So let's take a look at that. Next, I think that's the most important thing in this country, the strength of the rand against the US dollar. Just going to get that chart on the screen for you. There you can see the rand. Obviously, this chart is inverted, so when it goes up like this, the rand is weakening against the dollar. When it goes down, as it has been for the last few years in this channel, then it means that the rand is strengthening. So it's been in a strengthening channel defined by these upper and lower channel lines, which I've drawn here for some time now, really since Pravin Gordhan was appointed over here. And you can see this touch point here was created by the ANC elective conference, where Ramaphosa was elected as ANC president. And since then, the rand strengthened considerably, all the way down to 11 rand 50 to the US dollar. But obviously, that was a trend which could not be allowed to continue, because it was hammering the gold mining and platinum mining industry in this country. And I think that the authorities decided that they must actually allow the rand to weaken somewhat, which is what they have been doing. The rand has weakened quite a lot. Unfortunately, that weakness has coincided with a rising oil price in US dollars, and that has meant that South Africans are facing some pretty steep petrol price increases. Last month 72 cents, this month 82 or 85 cents. The petrol price in South Africa is rapidly approaching 16 rand a litre, but it's still much cheaper than it is in first world countries. Notably in Britain, for example, it's about £1.20 now for a litre of petrol. But of course, they have excellent public transport, which we don't have. So, but anyway, you can see here that the rand is in a weakening state, but within a long-term strengthening pattern. And this weakening state could actually take the rand as far as this upper trend line here at about 13 rand 50, which will obviously have a significant impact on things like the petrol price and the level of inflation locally. Standard & Poor's, in their latest assessment of South Africa, have left their rating unchanged. They, of course, are the most pessimistic of the three rating agencies. Fitch is due to report in June, and Moody's, of course, is the only one which has still got us on an investment grade. And everything really depends on whether the government can manage its debts. Can they bring the debt covenant in as promised? Can they stick to their fiscal consolidation which they've undertaken? A lot of that, of course, in turn depends on how the SOEs, the state-owned enterprises, are handled. And doing things like giving 21 billion rand to SAA, in my opinion, is a move in the wrong direction. The mining sector showed a pretty hectic downtrend in this last quarter. It was down 3.4% on last year. Manufacturing was down 1.6%. And you must remember that mining accounts for about 8% of our GDP and manufacturing about 13%. So these two figures are not good. They don't bode well for the GDP figures for the first quarter of 2018. New vehicle sales, however, looked pretty good. New vehicle sales is something which economists follow closely, and the reason for that is that it's a good indication of consumer spending. Consumers, when they don't have money, they tend to repair the old car and keep it on the road for another couple of years. But as soon as they do have money, as soon as they're feeling a little bit more wealthy, they go out and buy that new car, albeit on credit. But so that means that the 3.6% jump in new vehicle sales, and in fact it would be more, it would be 4.6 if the Fiat Chrysler numbers were taken into account, is a very good sign. It means that people are going out and buying cars again, which means the South African consumer is feeling considerably more optimistic. Approximately 60% of the new vehicles manufactured in this country are exported overseas, particularly to Europe, and also the UK is a great importer of South African vehicles. So that's quite an interesting statistic, because it means that vehicle production in this country is a big source of foreign currency. We also need to, while we're considering the economy, we need to think about the agricultural sector. As you know, we are recovering rapidly from the drought conditions that occurred a couple of years ago. The crop, the maize crop this year is expected to be about 12.8 million tons, and this is well above what is needed here locally in South Africa. We need just less than 10 million tons, so the balance will be exported, again creating good surpluses of foreign currency. But I think the most important point about agriculture is that there are many people who live either partly or completely on subsistence farming in this country. So the good weather means that those people will simply be better off, because they will be able to grow their food instead of buying it. The public sector wage negotiations are a matter for concern. Obviously, the public sector in this country is huge. One of the worst legacies of the Zuma era was this massive overburdening public service, which is now absorbing 35% of total government expenditure. Hopefully they will be able to negotiate a wage settlement with the public sector unions to keep it within what they are expecting from a fiscal consolidation point of view. If that is not possible, it may be very difficult to do what we have said we will do as far as paying off or paying down the government debt. And that, of course, has an impact on the ratings agencies and how they perceive this country. Interest rates were kept at the same level, and although inflation jumped up from 3.8 to 4.5, nonetheless the CPI is well inside the 3 to 6% target range, and it's much better now than it was under the Zuma era. A couple of years ago, we were really battling to keep our inflation rate inside that 3 to 6% target range. Now we're sitting with it at roughly the middle point of that range. So that is very, very good. And we're doing a lot better than other emerging markets. And I just draw your attention, for example, to Argentina, where inflation is running at about 25% and interest rates are running at about 40%. So you can imagine what it's like living in a country with those kind of statistics. The Reserve Bank, of course, was never captured. It's one of the great things about South Africa. There are two major institutions that were never captured by Mr. Zuma and the Guptas, and that is the Reserve Bank and, of course, the judiciary. The Reserve Bank has maintained the integrity of our currency, and it's enabled us to ride through this really dark period while Zuma was in control. Unfortunately, the growth rate in GDP is still not sufficient to absorb all our school leavers that are coming into the labor market every year. So unemployment is not yet being actually addressed. The oil price rise, as I pointed out earlier, combined with the fall in the rand to push up the petrol price, and that is going to affect all of us, and of course it will feed through to inflation in due course. All right, that's more or less all I had to say about the South African economy. I'd like to make a few general points, and then we can move on to commodities. First of all, a couple of, 4 months ago, we wrote an article about Bitcoin. We actually wrote it last year, and I'd just like to go back to this Bitcoin chart and show you what's happened since then. Here you can see this. What stimulated that article was this move in the price of a Bitcoin, which went up to ridiculous levels here. Actually reached about $18,500 US per coin at its highest level, 18,786, and that occurred on the 18th of December. But just before then, on the 8th of December, we published an article here where we said that we thought that this rise here was indicative of an asset bubble and it was unsustainable. And we advised anyone who had Bitcoins to sell them and anyone who didn't have them to stay out of that market. Since then, the Bitcoin has collapsed, right? It fell all the way down to this low point here at $7,246. Since when it has rallied and then made a new lower low down here at 6,582. We've again had a rally, but making it now a new lower double top here. So it's lower than this resistance at 11,500. We've got lower bottoms and lower tops. And I expect that this Bitcoin will continue down and break this low here. So the bloodletting is not over. That's really what I'm trying to say. And if you acted on our article, which was published on the 8th of December last year, you would be smiling all the way to the bank. I hope you did. And on another general point, the new stock exchanges which have popped up in South Africa in the last year, of those 4 new stock exchanges, the one that's really showing signs of being a serious competitor to the JSE is the A2X. They have managed to sign on Sanlam in a secondary listing. Sanlam, of course, is the 14th biggest company trading on the JSE, and taking that company on has increased the market capitalization of the shares in the A2X enormously. The JSE, of course, remains massively big. It has a total market cap of 11.7 trillion dollars, and it is the 17th largest stock exchange in the world. But it is feeling the pressure of competition from the A2X, and it says that it has reduced prices by 20%, and I presume that that's talking about its cost to stockbrokers and so forth. The A2X is looking at now being able to trade both ETFs, exchange-traded funds, and ETNs, exchange-traded notes. And they're also going to start taking on primary listings. Up until now, they've just been doing secondary listings of companies that are already listed on the JSE, but they are now looking to take on primary listings as well. I think this is very good. I think competition will help the private investor because it will reduce the cost of trading in South Africa. The Government Employees Pension Fund, the GEPF, has about 1.67 trillion rand invested, and they own something like 10 or 12% of almost every major blue chip on the JSE. But in 2017, they ran a shortfall of 42 billion rand, which had to be jerked in by the receiver, by the government. So taxpayers had to pay that 42 billion rand shortfall. And this is because they made bad investments. For example, 4.5 billion rand, which they lost in a company called Erin Investments. And now I see that they've put 4.3 billion into AO, which is the newly listed company. And AO is an interesting little business because since it was listed, its market capitalization is more or less halved. Just put a bit more, well, I put it all on the screen. But it really hasn't done anything, and it's trading now at about half the market cap that it listed with. So that means that half of that 4.3 billion has already basically gone. Now, just turning our attention to the north, Zimbabwe, the new president there, Mnangagwa, has been improving their economy steadily. There's a Chinese firm there, Sino Steel, which is busy increasing their ferrochrome output from 120,000 tons a year to about 300,000 tons a year. At the same time, they're building a big power station at Wankie, and this is obviously going to create jobs and help the Zimbabwean economy substantially. So in a very similar manner to South Africa, a change of leadership is having a massive impact on the Zimbabwean economy. All right, let's turn our attention to commodities. I'd like to just quickly take a look at the oil price. I'm going to look at the North Sea Brent oil price. And this price, I just want to put a few years on the screen here for you. Here you can see what's happened to the oil price. This, of course, is the collapse of the oil price in the second half of 2014. And then it rallied and then drifted lower in a classical sort of ABC bear market. And it finally made a low here in January 2016 at $28 a barrel, as many commodities did, and then started to rally. Okay, and it's been rallying ever since. It's recently touched a new cycle high. Sorry, that figure there is wrong. It should read $80 a barrel, not 100. So it recently made a cycle high at $80 a barrel. And that reflects the general improvement in the world economy. Oil, of course, is used in the production of almost every product, either directly because the product contains plastics or rubbers, or indirectly because the product is transported during its life cycle, or the raw materials for the product are transported by an oil-fired engine at some point. So the oil price is a very good indication of world economic recovery. And obviously, as the economy recovers, more and more AB income group people are coming onto the market, and they will be buying motor cars and consuming oil. The problem with oil, of course, from a price point of view, is that with the new technology in fracking, it is now possible for shale oil to be produced at any price above $50 a barrel. Below $50 a barrel, shale oil is basically uneconomic. But above that, it is economic. So the rise in the price of oil above $50 is rekindling the shale oil industry in America and elsewhere. And that will tend to place a ceiling on the oil price over time. Looking at the commodity situation in South Africa, I see that we also have a Chinese businessman, a chap called William Yang, who is ready to invest $5 billion into our ferrochrome industry. Of course, South Africa has got everything necessary to have a big ferrochrome industry. We've got iron and nickel and chrome in vast quantities and very good quality as well. So this chap, William Yang, is ready to invest $5 billion to create a ferrochrome industry in South Africa, which will basically replace the gold and platinum industry as the biggest employer in that mining area. He's talking about also putting in a big power plant to enable this to take place, and I think that we should be doing everything in our power to encourage this investment. He says he's got other friends in China who will also want to invest here once he invests. So I think we should do everything possible, sweep away the red tape and make it easy for him to bring his money to this country. Let's take a look at the gold markets. Always interesting to look at gold from a number of points of view. take a look here. Of course, the big news in the gold market is the closure of the Evander mine, which put 1,600 people out of work. It's been something that has been considered and worked on for months and years, but now finally they've taken the decision to close the Evander mine because it's just not making money. So those 1,600 jobs bring to 70,000 the total number of jobs lost in the mining industry since 2005. And the reason is obvious. South Africa's average cost of production of producing 1 ounce of gold is $1,010 US dollars. The world average is $878. So we are just uncompetitive in this industry. So South Africa is now the 8th largest producer of gold in the world, producing 140 tons of the metal. In 1970, we were the largest by a long shot. We produced 1,000 tons of the metal in 1970, and our production was more than double the total production of the rest of the world combined. So it's amazing how this industry has just evaporated. Sibanye, very important development in South Africa, where Neil Froneman, the CEO of that company, has gone around and bought up all the platinum and gold mining companies that he could lay his hands on. He's obviously buying them at very good prices from people like Anglo, and he's taking a risk. He's gambling on the fact that precious metals will recover. Of course, he made a huge investment in America, buying the Stillwater mine, which is basically a palladium producer. He paid $2.2 billion for it, and he geared up his balance sheet enormously to do that. Unfortunately, the price of platinum and gold hasn't really gone up that much, and so he's facing a situation now where, as you can see here, where he's got this enormous debt, and his earnings before interest, tax, depreciation, and amortization are down 62% on last year. He's just made a deal, or he's in the process of making a deal, to buy Lonmin, mainly to get his hands on its smelters and its refinery. But that will, of course, mean that he has to take on the debt that Lonmin has as well. But he says he might be able to finance a lot of this. He can raise $500 million by selling the production from Stillwater forward. In other words, he'll sell what that mine is going to produce in the future and get the cash in now, and that will help him to get through this current cash flow crisis. Well, all I can say is that this is a very high risk investment for those of you who've got the stomach for it. But you're not paying a top dollar for it. You're paying 8 Rand for the share that a little while ago was trading for a much higher price. If we go back and we look at the high price that it was trading at, it was 70 Rand. Now you can get them for 8 Rand. But there is risk. There is risk. Okay, let's look at some other companies. Generally, I have drawn your attention to Cartrack before. It comes under the JSE code of CTK. This company obviously is involved in putting devices into motor vehicles so that they can be tracked, both in this country and all over the world. It actually has customers in 24 countries around the world, and its technology has many applications, and it's growing at about 20% per annum. So we think that Cartrack is potentially a good investment. It's the kind of share that you should just accumulate on weakness whenever you've got a little bit of spare cash, because sooner or later it's going to become an institutional share. At this stage, it's not a share which the institutions can really get involved in. But as a private investor, you can get involved. Sooner or later, though, as I said, they will definitely become an institutional stock, and then the share should be re-rated. PSG is a fantastic company. Started and built up by a chap called Yanni Mouton, who very sadly has recently been diagnosed with early stage dementia. But this company, I'm going to put more data on the screen so that you can see what's happened here. Just to give you a measure, this company in 2008, in October 2008, you could have bought this share for 13 Rand 30. Today they trade for about 217 Rand a share. In fact, somebody's done the calculation. If you'd invested 10,000 Rand in the company when it first started, your investment would today be worth 500 million Rand. So what a fantastic investment. Of course, we know PSG because it is the company that launched and spun off Capitec Bank, and also Curro Holdings, which is involved in education. All right, let's look at Steinhoff. I just want to show you something there. The Steinhoff situation, very interesting situation. Steinhoff, of course, has been very much in the news. I think the 5 years probably the better chart. Right, here you can see what is interesting. There's the collapse in the Steinhoff price after the Viceroy report, and you can see how the share has been trickling down and down, and now it's trading at around 1 Rand 15 a share. Can you believe that? So earlier this year, and at the end of last year, in December last year, this share was trading for 56, 57 Rand. Now you can buy them for 1 Rand 15. If we put a moving average on here, that exponentially smoothed 65-day moving average, which I like, as you know, you'll see what that looks like. Yeah, there it is. You can see how the 65-day exponential moving average has moved down with the share price, and my advice to you is don't get involved in this share until you see an upside break, but I don't think you're going to see it. What is interesting about this company is that Coronation, which is the second largest fund manager in South Africa, has lost 14 billion Rand through being invested in Steinhoff. The PIC, the Public Investment Corporation, which runs the pension funds for all the civil servants in this country, lost 17 billion. Altogether, the big institutions in South Africa have lost 200 billion Rand through their investment in Steinhoff. And yet I point out to you that if you were a technical analyst, you would have seen this declining triple top here, which occurred between March, April of 2016 and about August of 2016. 3 successive tops where each top was lower than the one before. So each top represented basically a failure to make a new record high, and that happened twice, and then of course disappointment set in and the share price tumbled and steadily sold off. Now what I suggest to you is that this is basically a result of insider trading. As far back as, at least as far back as May of 2016, I believe somebody big, a big player, knew what was happening in Steinhoff and started to offload, and that is what created this triple top and the subsequent steady sell-off over the 15 months that followed the triple top. And anyone who followed technical analysis, charting as we call it, would have been aware of that and would certainly not have been interested in investing in Steinhoff. I know that the big institutions who've lost this 200 billion Rand tend to say that technical analysis is a waste of time, but we think that it's very important because it is your clue to insider trading. It tells you what the insiders are doing. And it's a very interesting study. So, if you want to know what the insiders are doing, you're not going to read about it in the newspaper, not until it's far too late. You've got to look at the chart and see that there's a loss of faith in this particular share. You see, when it failed to break up at this third top and it started to tail down, that was your signal to get out. And you would have got out at 80 Rand a share. Now the share is trading for 1 Rand 15. So you can see why I think this is a very important chart for you to learn from if you're a private investor. I'd like to just briefly talk about Dis-Chem now. Dis-Chem came out with results that the market found disappointing. Earnings was only up 6.6%, not the 20% as everyone was expecting or as the big institutions were expecting. This caused a major sell-off in the share price, as you can see here. But if you analyze that drop in earnings, it was caused by them reinvesting in and scaling up their wholesale division. Obviously, Dis-Chem is getting ready to have a lot more stores. At the moment, they've got 129. They took on 21 new stores in the current financial year. And they are gearing up to have centralized buying and distribution, which is a very, very good thing to do. It will pay dividends in the future. But obviously, there's a short-term cost, which meant that the earnings were not 20% as expected, but only 6.6% up. And there was disappointment and a major sell-off. But I would suggest to you that this is a buying opportunity and that in the longer term, Dis-Chem will perform extremely well. So that's something for you to think about. Naspers. Now, I know this share is very expensive on the JSE. It's actually the most highly priced share on the JSE. I'm just going to put a bit more data on the screen here. There you can see it. It's actually reached a very, very high point here. On one particular day, I think it traded over 4,000 Rand a share. But right now, it's trailed off from that, and it's sitting down here at about 3,300 Rand a share. The point about Naspers is that its biggest asset, of course, is 31.2% of Tencent. And the price of Naspers shares on the JSE is a 40% discount to the value of that Tencent holding. And remember, Tencent is listed overseas in Shanghai and in Hong Kong. Recently, Naspers sold 2% of its Tencent holdings. They also sold a company called Flipkart in India, and those two sales netted them 151 billion Rand in cash. So this is a company which is 40% undervalued, and it's sitting on a huge cash pile, 151 billion Rand. So that makes you think, I think. I think that at these levels, Naspers is undervalued and represents a good buy. That's what I'm trying to tell you. Long for Life. We've spoken about this share many times. Brian Joffe is the CEO of this company, and he has at the recent results presentation, he said that he is looking to make a major acquisition which will double the market capitalization of L4L. At the moment, he owns Holtsport, Inkler, Chile, and Sorbet. Those are the four companies that he's holding. The PE is pretty high. It's trading on a PE of just on 19. But you must remember that if you took into account the full year of the companies which L4L holds, they would have generated 510 million Rand in earnings this year. And that would have made the numbers clearly look different. Capitec. Obviously, this is one of those PSG companies that I was talking about earlier. The share price has just today moved above 900 Rand a share. So here you can see Capitec. There's clear support at 800. And the share has moved up today above 900 Rand a share. We believe that the share is now past the Viceroy report. The governor of the Reserve Bank came out the other day and said that the Viceroy report on Capitec was nonsense, and that the bank is extremely well capitalized, and that the Reserve Bank has got great faith in the financial statements produced by Capitec. So, that is an endorsement which anyone would want, and we recommend that you consider seriously getting into Capitec, because we think it will go over 1,000 Rand in fairly near future. All right, then just one or two others. Old Mutual is in the process of breaking up into 4 different companies. The South African piece of that is effectively currently trading on a PE of 7, and we believe that it will re-rate once the breakup is done later on in the year. In other words, it will re-rate to somewhere around where the Sanlam PE is, which is roughly 14. So there could be a good opportunity in Old Mutual to make a capital gain with virtually no risk at all. Finally, I'd like to just talk about Resilient. We have spoken about Resilient previously. So let's just take a look at the chart there. As you know, Resilient is a company that was hammered by a report from a asset management group called 361. And that report has now been vindicated. Resilient is having to restate its financials, incorporating its BEE schemes back to the 2017 figures, and the share price has been falling. As you can see, we recommended that you put on the 65-day exponentially smooth moving average, this blue line here, and wait for a break up through that. So far, we haven't had that break up. There's clear resistance at 68, and the share price is starting to look a little better, ticking up a little bit here. So maybe this rise will take it through that 65-day E. And that is, of course, when you want to become interested in the stock, because you will be buying it at less than half of the price that it was trading for just 6 months ago. And Resilient, of course, is a property company, so they've got some very good assets both locally and overseas, and that would be one to keep watching. Wait for that moment when it breaks up through the 65-day. Ladies and gentlemen, thank you very much for listening to this presentation today. I hope that you found something of value, and I will be back again on the first Wednesday of next month or sometime around then to do a similar presentation for July. Thank you once again for listening.